the forward curves are suggesting also that the Fed will be inclined to cut rates at some point towards the end of the year and certainly into early next year. How do you justify that? Where's the logic in that? Given, if as you say, the economic conditions don't really deteriorate as badly as people feared at the beginning of towards the end of last year, and we have this kind of meandering situation. What's the incentive for the Fed to go back and cut rates when they're telling us that they will keep them there for a while, and maybe they consider that to be a kind of a new normal, if you like, given inflation there's still question marks about the unemployment rate being so low at the moment?
Well, yeah, I think it's hard to be a central banker. I think that if, say, we continue to see earnings go down, average hourly earnings, and we continue to see core inflation go down, but the unemployment rate is flat, does anybody really believe their natural rate forecast? I mean, it has to be confirmed by the data. I think both the market and the Fed expect the unemployment rate to go up, which would kind of, vindicate sort of coming to a peak and ultimately easing. The one thing I'd say is that I don't think you should focus as much on how much they cut, but on where they cut to. That, from the Fed discussion, above 4%, they seem to think that they're kind of contractionary. So I think that the, say, 2023 market that sort of forecasts the, Fed funds ending the year at 4.5 or 4.25, that's still stepping on the brake, even if there's some cuts implied. It's just not stepping on the brake as hard. What I do think is troublesome is 2024, where if inflation really doesn't start approaching the target, the idea that they cut all the way down to 3, which is basically what the market has priced in, I think that's where there could be more disappointment. But I think, until going into the low 4s, if inflation's coming down, the Fed will say, well, look, we're just being prudent and taking a little bit of the pressure off.
So, Stephen, I suppose just to contextualise all of this for the people that are playing FX at home, what would you be eyeing then in terms of how to play the Fed and I suppose play some of the other crosses? Because we've seen a little bit of volatility over the course of the last few months, to be sure, but what would be your suggested trades for anyone watching?
Well, look, we'll know, Friday morning, my time, I guess Friday night, your time, exactly what to do next. If unemployment comes out, say it comes in 150,000 on the low end of expectations, the dollar move is just going to continue and the market will say, yeah, we were right all the time. If it comes in 400,000, it's going to be a real mess. And the question will be what to do next and what to believe. We're kind of on the weak side. We're the market's pricing about 190,000. We're at 170, but you can be wrong sometimes. And I think that if the numbers continue to support the narrative, there's still quite a bit of room for the dollar to fall.